Good afternoon, everyone, and welcome to the all-virtual edition of the 2021 Payments Canada Summit. Thank you much for being here. My name is Ryan Grundy. I'll be your moderator today, and I am the lead of industry relations for Payments Canada. Today, we're going to discuss a very hot topic, which is what Fintechs need in order to move their business forward and grow payments in Canada. Today, we're very fortunate to have with us a star-studded panel to discuss the current state of Fintech, the integration of new and innovative technologies which are necessary to grow, and the role of traditional banking and what it will play in the overall future of digital finance. So without further ado, I think we should hand it over to our esteemed panelists to introduce themselves, and we'll start with Pamela. Go ahead.
Great. Thank you very much, Ryan. My name is Pamela Draper. I'm the president and CEO of a company called Pateno Payments, Inc. That also owns a cryptocurrency exchange named Bitvo, Inc. Prior to joining the payments and the cryptocurrency world, I spent about 14 years in corporate investment banking in Canada at CIBC and then at BMO Capital Markets.
Thank you, Pamela. I'll turn it over to Ryan for introductions.
Sure. I'm Ryan Yates. I'm the president and founder of Apaylo Finance Technology. We're a pretty new payments company. We've been around since 2019. I really saw most of our growth in our business over the pandemic. Myself, I've been in banking for over 20 years and actually have founded a number of Canadian financial institutions. So was one of the founding leaders of Modus Financial, Meridian's Bank, as well as started an innovative payment company with the founder of ING back in 2012 called ZenBanks. That's pretty much it for me.
That's great. Thank you, Ryan. I'll pass over to Paritosh for introductions.
Thanks, Ryan. Good afternoon, everyone. I'm Paritosh Gupta. I am General Manager at KOHO, where I've been for just about 1.5 years. Prior to KOHO, I was with another payments company here in Canada. And before that, I've helped build companies in the mining and mobility spaces.
Thank you very much. And last but certainly not least, Jeffrey.
Hello, everybody. My name's Jeff Smith. I think I'm the old guy of the group here. I am the president and CEO of Digital Commerce Bank. We are a small private Canadian bank in Canada, and it's good to see a couple of customers on the panel with us as well. My history is, in addition to starting Digital Commerce Bank in 2007, I was a co-founder of Direct Cash Payments, the second largest ATM business in the world, with operations in Australia, Canada, the UK, Mexico, and New Zealand. So been around payments my whole life, and I'm an accidental banker, but that is what I do today. Welcome. Glad to be here.
Excellent. Thank you very much, Jeffrey. So as mentioned earlier, we're here for a discussion around, Fintechs and what's needed to move business forward, and the role that, that Fintechs and financial institutions can play in collaborating in order to bring that innovation to market. But I think we would be remiss in our discussion today if we didn't sort of tackle a topic that's top of mind for everybody in this day and age, which is specifically the global pandemic and the impact that it's had upon our respective businesses. So Pamela, I'll start with you. If you want to tell us just a little bit about how the pandemic has impacted your business.
Yeah, sure. So we spun Pateno Payments, Inc. out of DCBank in the middle of the pandemic. Jeff and I kind of sat down at the beginning of the pandemic when we were all mandated to go work from home and said, you know what, let's make the most of not being able to leave our houses and work really hard and kind of get a couple of these new business initiatives that we had in mind off the ground. And what Pateno Payments does is we facilitate online payments for businesses. So if your business has a website or a mobile application and you want to integrate that into the banking system, whether that's to identify your customers via things like the credit file method, or whether that's to accept or remit payments to your customers online via products like e-transfers or EFTs, Pateno provides the technology behind that and helps these businesses grow and scale. So if you think about the movement to online payments during the pandemic in particular, it has been positive for our business in terms of growth. There's been a lot of businesses where they might not have had such a large online presence before, and then it became imperative for them to move in that direction. So that was a catalyst for growth and positive for our new startup company. And in addition to that, the employees at the company are pretty kind of tech-oriented, tech-forward. So going remote and working from home wasn't a huge deal for us in that perspective. The transition happened pretty easy. And then, as I mentioned, the other business that we have that's a subsidiary of Pateno is Bitvo, which is a cryptocurrency exchange. So throughout the pandemic, you saw the price of Bitcoin in particular quadruple from the very lows at the beginning of the pandemic. It's up actually 6 times now, from 6,000 USD to it was over 60,000 USD last week. So the growth in the cryptocurrency side of the business and the interest in the cryptocurrency side from mainstream public as well as massive companies like WeWork, Tesla, MicroStrategy. It's been an incredibly busy pandemic and net positive for both of the businesses that I'm involved in. The cryptocurrency business runs 24/7. Those markets don't close. So again, the team there was used to working from home because we didn't want to spend 24 hours a day in the office necessarily. So again, that probably helped in our transition as well.
Excellent, thank you. Ryan, I'll pass over to you for the same question. How has the pandemic impacted your business?
Yeah, I mean, for us, the pandemic has been really great for our business. We started the company back in 2019. Just because I have my long banking history, I mean, payments was the future and still is the future. But really, what happened with the pandemic was it did 2 things specifically. First, made many traditional bricks and mortar places of business move online and place their digital strategy. And payments acceptance at the top of the priority list. And second, it made physical cash pretty much unacceptable for most retailers, and due to the cost of handling cash or even physical hygiene of the cash. So we saw our business grow from really startup overnight to about 5 billion in payments a year right now, and it grows every single day. But yeah, so I mean, it really catapulted us from being a newly minted fintech or startup to a pretty much billion-dollar payment company overnight. So really, it's been really strong for us, and it's been really strong for those merchants that we work with that have sort of adopted those digital strategies. They're now, connecting with more customers and driving more business than they were before the pandemic. So overall, generally pretty positive. Thanks.
Thank you, Ryan. Paritosh, how about you? How has the pandemic affected your business?
Thanks, Ryan. So I think similar to what Pamela and Ryan said, I'm sure all of us had some uncertainty going into the pandemic, but KOHO came out really, really well from it. So just for everyone's benefit, KOHO is a neobank here in Canada. We started operations in 2017, and we are at least currently the largest neobank in Canada. And so because we're consumer facing, we were trying to figure out what the impact would be on the consumer psyche of the pandemic. And we saw a huge surge in accounts opening and self payments getting loaded to our accounts. And that is great for KOHO with the volume that was coming in, but it, on the other hand, also showed a bit of the apathy and the sluggishness that the big banks had to transform to digital channels, which was not great in the larger context. We related to the SERB loads, we also saw a lot of fraud coming in, and I call our risk team the unsung heroes in the company because they worked around the clock to be able to contain that. And most of this was linked to a data breach that happened at one of the credit unions. And we saw a lot of, unfortunately, elderly people whose accounts were compromised and data was compromised and was used to open accounts. But to the risk team's credit, they were able to catch pretty much all of it and prevent all of it, which was great. And the other thing that we saw was a surge in payment volume overall. So we gave users a Visa spending card, which you can use online or in stores. And as e-commerce surged, we saw the use of our cards also surge quite dramatically. And all of that has sustained through till today, which is great to see from a KOHO perspective. So all in all, we came out really well and really, really strongly out of the pandemic.
Excellent. Good theme of resiliency that I'm seeing coming around the table. How about you, Jeffrey? How has the pandemic impacted DCBank?
Well, I think I have to paraphrase exactly what Ryan, Pam, and Paritosh have said. like, I think when you look at the payments business, and I'm reticent to say this because I've got a lot of friends in the in businesses that haven't been as successful during the pandemic. So there's a ton of business that hasn't been successful, primarily in the retail sector. In our business, in the payment space, we've seen a tremendous growth as organizations move to get their payment streams online. My previous business, the ATM business, was all cash that we sold in 2017. But if you look at that business, it's been decimated from cash distribution. When this pandemic started, we even had retailers suggesting that they'd stopped accepting cash. We've seen a tremendous movement to, like the others have said, to electronic cash. I think that we'll continue to see that. That shift has changed. If you even think personally, where, I was not an Amazon shopper prior, but you think about what's happened now. A significant portion of our purchases are being delivered electronically. That's not been good for small business. It's been great for big business. And a lot of the small businesses are now finding ways to become, electronic payments. From a personal perspective, I've seen our staff be very resilient, able to work at home. Although I do want to go back to the office. I think that there's a camaraderie, idea exchange that just doesn't happen over video. I think that being locked up for 2 years, we've had, from a business perspective, a number of our customers knew us. So you can have a relationship over Zoom with organizations and individuals that you know, but it is very difficult to begin a relationship or trust on a flat screen. We have to do it, but I think that that is something we need to get back to. I personally am looking forward to getting back to the office. I've been working remotely for 10 years, but I want to get back to the office to have that idea exchange. For our business, it's been fantastic. We're an enabler of Fintechs. Fintechs come to us with a particular problem, and we look for a way to provide them access to the payment system, banking, and that's our job. And in many cases, that's all electronic or done via API or digitally. So it's been great. Give you a reference, but anyway, that's what I've got.
No, that's excellent. It is interesting because you'd mentioned it that sort of not all businesses have had the same experience. And it's funny, the follow-up question I had was, tell me about a positive that's come out of the pandemic. But really, in talking about how the pandemic has impacted your respective businesses, it's been primarily positive, which is good, and a source of gratitude, because clearly in this industry we've been able to sort of accelerate, I think, some of the changes that benefit the industry. And there's some gratitude to be taken there from the resiliency that's come out of the pandemic. Jeffrey, you talked a little bit about sort of your role in sort of brokering partnerships and facilitating access and innovation. So I'd like to sort of talk a little bit about some of those partnerships and talk about new partnerships. And Ryan, I'll finish my question, but I'll let you know that you're up first, so you can ponder it while I'm finishing my question. But I just want to talk about some of those partnerships that Jeffrey had alluded to that led to some of the new opportunities that came out this year. If you could kind of elaborate on some of those, and maybe how the pandemic may have accelerated them, or even net of the pandemic, just talking about partnerships that have emerged that will help us to move forward into a new future for Fintechs.
Yeah, for sure. Yeah, I mean, it's a really great question, right? I mean, I think going into the pandemic, there was this sort of cat and mouse sort of rivalry between the fintech community, paytech community, and probably the banks. A year into this, though, I think we're starting to see the benefits of those partnerships. So the banks are seeing that, fintechs are offering niche or even innovative solutions to some of the traditional problems. And I think some of the fintech community are seeing the resiliency that, the big banks and fintech bank or enabler banks like Jeff's bank, bring back to the community. So it's created this sort of atmosphere where together we're a bit stronger than we were competing against one another or in silos. And I think, this isn't just a business conversation, right? Like it's deep and routed in that in a couple of ways, right? That sense of partnership and how helping people that are down or bringing people together has actually been quite a bit what this whole pandemic has been about. So I don't know if that answers the question very well, but I definitely see that, a year and a half after the pandemic, I think the atmosphere or even the willingness to partner has changed for different reasons. I think people and companies are now seeing that partnerships are valuable, and they have that understanding and can kind of put themselves in the other person's shoes now a little bit better than they could before, to seeing the value that those partnerships could bring. Yeah, I think hopefully that answers the question a little bit.
Oh, it does, absolutely. And Paritosh, I'll pass it over to you now to talk a little bit about some of the partnerships that have grown that'll enable us to take advantage of the opportunities going forward.
Sure. So we launched a pretty large initiative with a partner company with Wealthsimple. So we've launched our KOHO Save program, which is in partnership with them, which gives people 1.2% on their savings deposits with KOHO. And it's probably the first hybrid spending checking or spending and savings account in Canada. And at the same time, we are also helping them launch their own card product. We had the benefit that we were working with them pre-pandemic, I think to Jeff's point. So it's easy to continue the relationship. But I think one of the things that has come out, and this is not just from my own or our company's observations, but also what I've seen other people and my friends do, it has become clear that you can run businesses without having to fly to another place and sit down together. Is it better? Do I miss the office? Do I miss meeting people? Absolutely. There's no doubt about that. I'm still old-fashioned in some of those ways. But people have been running business pretty effectively once that stigma of, hey, didn't you spend money on a flight to come and sit with me in a jacket and a tie has pretty much gone away. And I know I'm going slightly off topic, but it is funny for me that our auditors, we are audited by Deloitte, our auditors now join video calls sitting in hoodies, and you would never ever expect that to happen pre-pandemic, right? And it's a different way of doing business, but in some ways it's also more efficient. And we are in the throes of a couple of other pretty significant partnerships that we'll be launching shortly. And while I'm not running those directly, the people who do run them, I've never heard from them that, hey, because we're not able to sit together, things are getting delayed.
Excellent. Thank you very much, Paritosh. How about you, Jeffrey? How have partnerships sort of blossomed through our current circumstances to help us capitalize on opportunities?
Well, I think, it's interesting. There's been a sense of urgency. And first off, all of us are lucky to be in the payment space, really lucky to be in the payment space. And it's not by happenstance, it's just that we're lucky if friends are in the restaurant businesses, but our business is in the payment space. But there's been a real sense of urgency because of the pandemic to create opportunities to sell products and services. And I'll use e-transfer as an example, a non-refutable transaction that allows you to move money in Canada. That has grown exponentially. And the reason it's grown exponentially is because people are looking for a non-refutable transaction to pay for goods and or accept payments. And we've seen a real sense of urgency for businesses, neobanks, Fintechs, even bricks and mortar businesses to find other ways to get money, to get paid for things, because cash is not as readily available. People are making alternative choices. So I've seen a real sense of urgency by businesses, executives, to find ways to find alternatives for clients to pay. And I think that people are now sitting in front of their computers a lot more time at home. So that they're seeing all kinds of things. Pam's business has seen Bitcoin, she talked about, go to $60,000. People are looking for that alternative. Paritosh is talking about customers, putting a lot of money on cards and spending them at a neobank. People are looking for electronic ways. I've seen a lot of partnerships, and Ryan's business, finding opportunities for payments businesses has been growing everywhere, electronic payments. And really, that's where we've seen a lot of growth and new opportunities come up where people are looking for, hey, listen, we used to accept 80% cash, or we used to accept credit and cards. People are coming into our door. They're no longer coming in. We're delivering product to them. We've got to take that in a non-face-to-face environment. And, to Paritosh's comment, the bad guys are seeing this too, so you've got to manage that fraud, right? So, and managing the opportunities I've seen have all been revolving around, hey, growing alternative payment streams and managing fraud and managing, bad actors in the community, making sure that you're doing a bunch of things around that space. But that would be, what my view is of the partnerships that have come to play in the last sort of 24 months, 18 to 24 months.
Excellent. Thank you, Jeffrey. And Pamela, we've got the unenviable task of being sort of last to respond to the specific question, but I'll turn it over to you.
You know what? I'm actually happy to go last on this one because as I sat here and listened to everyone speak about the topic, one thing came to mind, and it was an overriding partnership with technology across the board due to an acute and near-term need for it. So I'll give a couple examples in terms of what I mean by that from my day-to-day. Our customers all of a sudden, or people that wouldn't have maybe naturally come to us to be customers, all of a sudden had that near-term and acute need to integrate more technology into their business, to go more online, to be able to accept payments from their customers online, because now their customers couldn't come in person or weren't able to come in person. And that's not something that will go away when the pandemic goes away. It's a permanent advancement in their business that expands their market. And then on the flip side of that is the customers. So while businesses are increasingly adopting and partnering with the technology, customers are getting more and more comfortable with the technology and moving online as well. So you have the entire baby boomer population that may not have been as comfortable with that before, but again, kind of at a necessity, is becoming comfortable with it, which is providing an extra avenue for all of these businesses to reach that. Jeff said he was an Amazon shopper before the pandemic, and now he is. I'm sure that's definitely not the outlier across the board. And on top of that are things like people being comfortable using the e-transfer product in certain online payments products. So it's really expanded the market for fintechs, I think. And then it goes even further to government type organizations with the increase in fraud. And unfortunately, we have seen a large increase in fraud throughout the pandemic. Now you have companies like ours working with the police who are developing much more robust cybercrime unit so that they can understand how some of these online products work, so they can understand how the cryptocurrency space works. And across the board, as a society and as a country, we're all rushing for the more increased adoption and partnership with technology, which I think at the end of the day will be a net benefit coming out of the pandemic. I don't think it's necessarily a negative.
Well, that's great. Thank you, Pamela. It's interesting, again, just to remark on sort of the the sort of positivity or the positive elements that have been drawn out of the pandemic. I know that in many ways the circumstances have highlighted the benefits of being sort of nimble and innovative, which are kind of hallmarks or characteristics often ascribed to sort of the fintech industry. What's interesting listening to the conversations is sort of the emphasis on safeguarding as well in terms of defending against fraud, which may not be something people ordinarily ascribe to fintechs, but obviously is sort of at the heart of what's sort of keeping us busy and keeping us active these days. So really great. Thank you very much for your responses there. So we've talked a little bit, obviously, about some of the characteristics and some of the resiliency and some of the sort of, I guess the silver linings that have come out of the current situation. But if we move beyond the pandemic and take a look at, the future and the path being charted forward, what do you feel fintechs really need in order to assist with moving their payments or their business forward in Canada? And we'll start with you on this one, Paritosh, and I'll repeat the question. What is it that you feel fintechs would need in order to help move businesses forward and grow payments in Canada?
Sure. I look at it from two different aspects. So let me take them one by one. The first aspect is the entire support that the industry can get, right? So we've been talking about open banking for several years now here in Canada. We are behind a lot of the other developed economies, and honestly, even behind a lot of the Asian economies. Like India has done wonders with their open banking initiatives and what they call India Stack. And so we need a regulator with the mandate from the government to implement it within a specified time frame and get it up and running. And that's going to benefit, yes, it'll benefit the fintech, but it'll also really benefit the consumers, because there's this entire set of population in Canada which is underbanked and which really the big banks don't want to or don't really care to serve. So that is where fintechs can come in with unique products and help serve these customer base, these customers, right? So all Canadians can be better off. So open banking is an obvious one. The real-time rails, that'll be a huge boost for fintechs. Frictionless, seamless payments is just like table stakes. And also proactive regulations overall. If you look at the use of things like selfie for KYC verification, that came in only late 2019. And by the way, the serve fraud that I spoke about, if we had that available earlier, because the technology has been around for years, we could have prevented a lot of that serve fraud by using selfie IDs. Like, those are pretty secure. But we were behind in implementing that, right? Overall, on open banking, if you look at the use of digital IDs and e-signatures and all of that entire stack, and having proactive regulations around that is critical to develop it as a usable product across the board. So that's one entire aspect that I look at. But the other thing is also, the onus is on fintechs to work with the framework that they have available and to think big. It's the onus is on us to bring transformationally innovative products, and not just incrementally innovation products, right? Not just Me Too copies from the US or Europe or any other places that we see. The onus is on us to take our conservative hats off and not celebrate a company that gets sold for $50 or $70 million as a success, because those companies are just getting started and they've just found product market fit, and there is so much more to build on top of that to really transform the way things are done in Canada. So we should stop celebrating those, and really the entire ecosystem needs to think about going for the big hits, going for the home runs, as opposed to being very happy with singles and doubles.
Excellent, thank you. Jeffrey, what about your views on what fintechs require in order to move business forward and payments growing in Canada?
Well, I have probably a slightly different view. I think one of the most important things for any business, whether it's a fintech or other, is a clear understanding of who they're servicing, what they're doing, and what the margin opportunity looks like. And that is vital. I've seen, if not dozens, 100 fintechs that don't have a clear understanding of the product offering, the margin opportunity, and the long-term success plan. An idea does not necessarily equate to a business. And I think it's very important that every fintech should consider, how's their product market going to fit? What is the total addressable market of that opportunity? And what's the scalability? And consider how you can improve your technology. I think that's what you need to understand as a base. And then I think you need to understand the regulatory environment, the risk profile of the environment. Although I think that the consumers are going to be heavily advantaged in Canada by having something like open banking. Open banking is not the panacea. I think it is a good product to offer consumers alternative and choices that'll allow fintechs access to information that'll create them the opportunity to offer products. And it's opening a marketplace that the banks are reticent of opening, because it provides the ability for any fintech to sell products to their clients, assuming that that client allows it. So I think that's an opportunity, but I actually think there's an opportunity now with the way the market is segregated in offering opportunities to those clients and tying up accounts and customers. So I think they need to understand, one, the business plan, the marketing opportunity, understand the regulatory environment very clearly where they're operating. And I think if they understand those things, they'll have a real business. And I think there's a tremendous opportunity, and particularly in Canada and North America, to do so. I do think open banking and the real-time rails are going to assist, but they're going to be table stakes. You need to have a clear understanding of the market you're addressing.
Excellent. Thank you very much, Jeffrey. Pamela, how about yourself? What is it you feel that that's required in order to move fintechs and grow payments in Canada?
For the sectors that I am most exposed to, number one is without a doubt clarity around banking and obtaining reliable banking, and number two would be regulatory clarity. And I think other emergent industries feel this as well. I know cannabis would say the same, but particularly having exposure to cryptocurrency, the big 5 Canadian banks have all but shut down access to even just a checking account on an industry-wide basis. And these are businesses that are regulatory compliant with all of the regulations that Canada currently has. So they are FINTRAC registered money service businesses and FINTRAC reporting entities. They're fully in compliance there. The Canadian Securities Association is in the process of bringing them all under their fold. And within a couple of years, when IROC is ready also, they will be IROC registered dealers. Very likely and for the most part. So these are businesses that are meeting the Canadian standard for how they should operate and consumer protectionism, but at the same time, they can obtain just even basic banking services from the major banks within Canada. And this is something that's pretty unique to Canada. So other jurisdictions in the world aren't necessarily feeling the same pressure. Some are, certainly, but the U.S., for example, has a pretty well-defined regulatory regime developing for cryptocurrencies, and certainly a segment of banks, large banks in the U.S. that are very crypto-friendly and do take on these cryptocurrency businesses. And the industry in Canada is really kind of being quelled by the lack of access to banking and the bank's lack of willingness to participate and be collaborative with the smaller fintechs that are exposed in the cryptocurrency space, for sure.
Excellent. Thank you, Pamela. And Ryan, how about yourself?
Yeah, I'm in the same camp as Pamela and Jeff and Paritosh's comments. I mean, I'd have to say the biggest item that fintechs need is partnerships, right? Partnerships from the financial institutions and the regulators. I mean, to a lot of Pamela's comments, right? I mean, in Canada, if you're an MSB, good luck getting a bank account, a basic bank account, one that allows you to pay your employees. You're going to wait about a year, right? So a lot of the regulatory and compliance teams within the banking infrastructure, they assess that with one sort of brush. So you're an MSB, you fall to this category, which means we're either onboarding them or we're not right now, right? So I think that barrier's got to go away, and we got to assess the risk, right? I think you should be able to provide basic banking privileges to pretty much any type of company such that is trying to operate in a good faith type environment. So, I mean, that's what I would say, partnerships with both the financial institutions and the regulators, and honestly, to continue with fintech or innovation in Canada, the ability to experiment and fail, right, without a bit of prejudice. The challenge is there isn't a lot of ability in Canada to experiment with the financial institutions. They have their core bricks and mortar products. They're the same products that have existed for hundreds or even thousands of years, and so to try new things is not really, in their sort of inside their box, right? So there needs to be some bandwidth to try some new things, try some things quickly. I think the fintechs can bring that to the banks. I think the banks can bring some of what Jeff said, actually, even though he said he's not a banker, to the fintechs, which is, the ability to create a business plan, the ability to identify your target market, right? And the ability to talk about things like how you're going to bring profitability to the business and what's that exit plan look like, right? Like, the banks can offer that to the fintech community, but in return, the fintech community can offer the banks some of that agility. some of that ability to move quickly and fail fast. So I think that's my answer after everybody. So
excellent. Thank you very much, Ryan. It's been interesting, hearing you talk a little bit about some of the, the historical characteristics ascribed to banks and fintechs, and how there's sort of the corresponding or complementary, aspects of the DNA that can help to sort of move things forward. And also interesting, the point was made earlier about the evolution of the relationship between banks and fintechs, how it's kind of gone from, being competitors to being co-competitors to now looking at a lot more of a collaborative environment. And so we've spent a lot of time talking about partnerships. I think for our final question, what I'd like to explore a little bit more is, how can we sort of, enable or sort of act as a catalyst, or what catalysts exist in order to foster better partnerships between banks and fintechs? And I don't know if it's sort of an anecdote you want to provide from your own respective, experiences, or if it's something that, you've observed outside of your own experiences, or really advice that you'd provide. But I'd be interested in, I'll start with you, Jeffrey, to talk a little bit about, what are some best practices or some tips you might have in order to sort of foster or accelerate this partnership between banks and fintechs?
I think one of the most important things for fintechs is to understand the rules of the game you're going to play in. So, and this doesn't matter if it's hockey or banking. And I see many fintechs that want to try something, but it's outside the rules. But if they understand the rules, they can absolutely deliver the product. So I think you need to find partners that can work with you in understanding the rules and how it works for them. And I'll use MSB as an example. Well, you got to be registered for an MSB under FinTrack, but what that registration doesn't tell you is that, you got to have policies and procedures, and they're not just written on a Hilroy scribbler. And I think if we have a partnership arrangement between the two, and more consultative than combative, and because I think one of the banks go, well, the fintech doesn't have any policies, I can't bank them. Well, versus helping and saying, here's the best approach to provide these and do that. We've been fairly successful in helping organizations get over the goal line and understanding the regulations and rules. That's been one of our advantages, is being able to explain the rules and find a way to make what the fintech wants to happen. But I think that the best way to make this work is the fintech understanding the regulatory environment as well as the counterparty. Because I know many of the fintechs get told, well, you can't do that. Well, the answer is you can do that, but it has to be this way versus, the way you'd planned. And if you adjust your business plan, you can get there. But oftentimes I find that some of the fintechs have spent months, if not a year or two, going around to the banks trying to get what is a great idea, but don't get the answer on how. They get the answer no. And I think for us to do better, we all have to get to how, not no. How, not no. Some are no, some have to be no, but, if we can get to how, I think that gets innovation going. How do we do this? And the banks, all of us need innovation, because the fintechs are banks' future acquisition opportunities, right? And what they're really trying to do, and banks really try to do, like pharmaceutical businesses, is have somebody else develop the opportunity and buy it when there's a good user base and market opportunity. But as Ryan says, let the other ones fail fast. But get to how, not no. Anyway, that would be my comment.
Excellent. Thank you very much, Jeffrey. Pamela, how about you? What do you think is sort of a best practice or a good example you've seen in terms of banks and fintechs partnering?
I think that's a really good point that Jeff made on developing acquisition opportunities and developing a pipeline by working with them to become compliant. I think it's a better lens to which the bank should look at it through. But I think what might help that is within each of the banks, if they could have a special division or a group that focuses on kind of emerging market opportunities and really take the time to actually understand the market, have an expertise on what the market participants would need to do to be acceptable from a compliance perspective or from a risk perspective. I think that would help them work with the group. I think part of the problem with the banks is it's just that they're a bit overwhelmed. So they have a couple negative experiences. They don't have a huge amount of expertise in the new sector. or they don't want to get to know each of the MSBs individually, and they know there's been a certain level of risk associated with it before. So the easiest answer, and when you work at a bank, where I spent 14 years working in a bank, the easiest, most riskless answer that will guaranteed get you in the least amount of trouble is just to say no. So that's kind of where they're coming from. But if they had this special group that evaluated these emergent market opportunities, and that was specifically their focus to do so, that might help change the lens on it. And I think even just pitching it to them the way Jeff said, and say, this isn't your competition. This is a low risk way for you to develop a new market product that you could acquire at some point, then in a completely de-risked state because the business is up and running. I think you need to pitch that to the CEOs of the big five, Jeff.
I don't want to pitch it to the big five. That's what I would.
Fair enough. Fair enough.
But I think the more the fintechs understand the rules and regulations, they can get there. And you can look at this lens, like you say, you can look through the lens and say, hey, this is a great opportunity. We should let them try it.
Yeah.
Thank you very much. Ryan, how about yourself? How do you feel on or what are your views on best practices or advice, tips, tricks that you have seen that would help to foster better collaboration between banks and fintechs?
Yeah, I think I share a lot of the same comments that Pamela and Jeff had. I mean, I myself am a banker. I spent 20 years in banking, built 2 financial institutions, and I think the issue that Jeff pointed out about the banks kind of go right to no, it's like a yes-no equation for them, rather than a here's how to help sort of equation, right? And I think, being open and transparent with the fintechs and providing them some level of coaching kind of through what the banks are looking for. Like most of these fintech founders, they're business people. A lot of them are students or young people, who want to start something and pursue their dream, but they aren't bankers, right? So I think I'm back to the foundation of a partnership, the foundation of work to a yes, or even to showing them how to move through the banking system and comply with the regulations while still pursuing their dream would be pretty helpful. So I'd say, all fintechs don't start out with the vision to compete against the banks, right? Rather, most are founded by entrepreneurs that see a service gap in the marketplace. So really by working together, the banks could learn a thing or two about moving a bit quicker in things. And I think the fintechs and the entrepreneurs could learn a few things about building structure and scaling and growth, and basically the regulatory framework. So, yeah, again, I think I share a lot of the same comments as the group on this one as well.
Thank you, Ryan. And Paritosh, how about you? What are your thoughts on the question?
I'm going to riff on it on effectively what everyone else is saying with 2 anecdotes, one from personal experience and one where I was talking to a friend who works at a pretty prominent fintech company in the US. And what he told me was instructive. We need to stop treating banks like monoliths, and we need to figure out what part of the bank really wants to or would want to work with us. So in this particular company, pretty well known, I'm not going to take the name, but one part of the bank was actively trying to shut them down. And another part of the same bank was actively reaching out to them to wanting to partner with them. And so figuring out your angle, instead of saying, hey, this is one big bank, or these are 5 big banks, figuring out what part of the bank would benefit from partnering with you is also critical. Like, we need to get savvier around that. So that is a pretty interesting insight that I got from talking to him. The other thing is from my own personal experience, and to Pamela's point, the company I was working with back in India, we had some embedded fintech products within our product, and the bank that we worked with most closely had set up a separate fintech division, and they pitched products to us that they were making money off of too, and these were innovative products that solved problems that were acute for us. and it was absolutely win-win. And they had built APIs. We could integrate those APIs easily and get up and running very quickly. And these deals were not struck over a period of 6 to 12 months, which is the average tenure of a deal working with a big bank in Canada, I understand. But we literally signed within less than a month and integrated it on our side and got up and running. So I think the banks really need to think about what's going to happen long term. Innovation is going to happen with or without them. The world is becoming increasingly permissionless, to use a term, right? Like, with crypto coming in, people are trying to go around the entire banking system. And part of that is because of the way the banking system is structured and thinks. And so I think the banks need to think about it benefiting them too by participating in the fintech ecosystem as opposed to not, and just having people innovate around them.
Excellent. Thank you very much. That's a great response all. So we're nearing sort of the end of our time here together, and I think that what I'd like to do, and it's been a fantastic conversation. I mean, I think a lot about some of the sort of the enduring mood throughout the pandemic. And I know in having this discussion today, it's really been sort of a tale of positivity and sort of taking advantage of opportunities and sort of looking at circumstances as a catalyst to accelerate some of the changes we've been seeing. I'd like to sort of give you, another chance just to provide me any final comments, and we'll kind of go back to the top of the order. So Pamela, we'll start with you. Any final comments you'd like to provide before we say goodbye today?
No, I'd just like to say thank you for hosting us today. And should there be any follow-up questions, I know this isn't a live session, but I think all of us are readily available on LinkedIn and through our company's websites. And to the extent there are any follow-up questions or you wanted to reach out for a particular payment product or service, for myself anyway, I would absolutely invite that.
Thank you very much, Pamela. How about yourself, Ryan?
Yeah, I would say, it was a great chat today. And, I don't get an opportunity to sort of get out of the weeds of building a business day to day. And so it's nice to talk to the community, right? That's all part of this. I think this pandemic has brought a lot of people to find new ways to collaborate and connect with one another. So Ryan, thank you very much for your time, and thanks to Pamela and Paritosh and Jeff. And, it was great to hear from everybody today, and thank you for inviting me to be a part of it.
Definitely welcome. Paritosh, how about you? Any closing comments?
I should have gone first on this one, so I could have said all of what Pamela and Ryan said first. No, absolutely. I just going to echo what Pamela and Ryan said. A great discussion, and thanks everyone for participating. And anyone who would want to reach out to discuss payments or any way that I or any of us can help would be very, very glad to. And Ryan, thanks for moderating a really, really nice discussion.
Absolute pleasure. And Jeffrey, we'll close with your comments.
Well, thanks, Ryan, for hosting. I think it's one of the things that we didn't mention is I think we're all lucky as Canadians to have a very resilient payment network, some great regulators, and a good go-forward plan. Like, I think the RTR, open banking are all great things that are going to innovate our business and allow a whole bunch of new products and services. And all of us need to help in pushing those things forward so that we can grow not only fintechs, but banking in general. I think fintechs are a great opportunity and future opportunities for all banks to look at new opportunities. So I appreciate the opportunity to be on the panel today. And of course, Digital Commerce Bank is open for business. We'd love to connect every fintech and happy to talk to people that want to learn how they can operate their business and how we can help. But again, thank you, Ryan. And it's been a great opportunity to be on this panel.
Well, I'll just close by sort of continuing on the theme of thanks, and thank you all to all of our panelists today. Really, really appreciate the opportunity to get some insight and letting us inside your respective living rooms, basements, offices, as well as inside of some of your thinking on the subject matter that we discussed today. So thank you once again on behalf of Payments Canada and myself, and I wish everyone a great day today. Take care. Stay safe. Bye.